Okay, in this video, I'm going to teach you why most beginner traders fail and how you can avoid being in that 90%. And I spent years learning how to trade, and to be honest, it was some of the most painful time of my life. It was actually so hard, and the first year was a complete waste of time. It was a complete waste of time because I learned from people who had no idea what they were talking about, and it held me back. And yeah, in this video, I'm going to teach you how you become a profitable trader and how you can avoid failing like the 90%. Okay, so there's two reasons why people fail in trading. The first is the wrong education, and this by far is the most important thing, right? And you'll hear people saying that the mindset, although that's important, and that's the second thing that holds you back, it's the right education. Because at the end of the day, you have to know what these markets are going to do, and you have to know, where price is actually likely to go. And I'm telling you, there's so much misinformation online. It's really hard for a new trader to actually filter out the BS from what actually works. And I'm going to show you a few things from my years of experience which don't work, right? Because let's be honest, when you start trading, everyone says the exact same thing, right? Support and resistance. Support and resistance. That's what you use. That's how the market moves. So let me show you why support and resistance doesn't work, right? Right here, and we're at Apple, right? This happens on all markets, right? So we have a high here, and we have a high here. What does support and resistance say? It says that this is good resistance, and that price will just bounce off this random level and continue down, right? Remember, we all heard these videos. I used to listen to these videos all the time. They said trading was that easy. You would enter here, you'd put your stop loss literally at the level or just above it like that, and then you just aim for whoever knows how much of a risk to reward ratio, right? And you'd be a millionaire. That easy, that simple. That's not how trading works. That is not how trading works at all. And it's such a misinformation, and it baffles me that people still use support and resistance. And let me tell you something, right? I've been trading for years now, and and this is what made me profitable, is literally using the complete opposite of support and resistance. Right? I use the absolute opposite of support and resistance. So rather than thinking that price is going to come here and bounce off this level and go down, I'm going to do the opposite. And what would the opposite be? The opposite would be, I'm going to look to buy in here, and I'm going to target this level. Right? I'm going to target this level. I'm going to buy price, and I'm going to know, right, the price is very likely to hit this level. I'm going to target price, and I'm going to ride price to this level. Now, why do I say I do the opposite of support and resistance? You have to understand something called liquidity. And this is the only thing you need to understand in technical analysis. Let me make this a bit clear. The only thing you need to understand is liquidity. And this is such a key concept, right? It's a key concept. Liquidity is essentially, think of support and resistance, right? Support and resistance. So right here, we have lots of so-called resistance. Where would people's stop loss orders be, right? Remember when you used to trade support and resistance, where would people's stop loss orders be? They'd be at this high and this high, right? We have, almost equal highs. So lots of stop loss orders would be here. The market, and this is so important, if you can understand this, you can be profitable. The market only moves for stop loss orders. That's it. That's the only reason it moves. It does not move because of indicators, because of VWAP, because of volume profile. It doesn't move because of any of that. I'm telling you, after years of trading, that is all I use. The market will move for stop loss orders. And the higher the time frame, right now we're on the daily chart, the higher the time frame, the more important it is, right? And this is why sometimes two things will either happen to you. Number one, price will just smash through this level. Or number two, right? Price will come up like this, take out your stop loss, which is somewhere around here, and then instantly reverse, right? Even if you know it's bearish. Two things that would happen. The reason that happens, is because there's lots of money up here, right? Now, money is just stop loss orders. And there's an entity that actually moves price called smart money. Now, smart money is just large banks, large hedge funds, insurance companies, all those sort of people. And in order for this entity called smart money to actually get into a position, they need someone else who can take the other side, right? Because there's billions of dollars that smart money are using to move price up. For them to get out of their position, they need to have billions of dollars of the other transaction, right? So right here, there will be people who have shorted Apple. That means they've got their stop loss orders here, and their stop loss order is going to buy price up, right? Remember, if you've shorted something like this, right, you've got your stop loss at high here, right? If that's what you've done, in order to get out of your short position, you're going to have to buy price back, right? So their stop loss orders here will act as liquidity for smart money. Liquidity is just how easy it is to get in and out of a position. And because there's billions of dollars here, it's easy for smart money to get out of that position, right? That is how the markets move. They only move for key highs and key lows on the higher time frames. And that is it. That is it. I'm telling you, after years of experience, that is why these markets move. I know so many profitable traders, and they all use liquidity. In one way or another, they're using liquidity. And, the myth about support and resistance, right, is it can work, but your win rate's going to be, so small, like 20-30%. You don't want that, because psychologically, and we'll get onto that on the next point, psychologically, that's so hard to deal with. If you want a high win rate, you want consistency, you want profitability, use liquidity. And let's just play this chart, right, and see what actually happens, right? Because support and resistance would say it bounces off here. Let's see what actually happens, right? Let's see what happens. that, smash right through it, and we keep on going, right, like that, and we continue up, right? You know, there's no ifs, ands, and buts about it. Price doesn't just bounce down and bounce up at random levels, because here, right here, would have been what would this be? Support, right? In fact, for those of you who've watched the channel for a bit, what this really is a liquidity sweep. All right, so let's mark this out. And if this is a bit advanced, don't worry, because there's a lot more videos on the channel about it. This right here, see this this low here. Lots of people would buy Apple, and they'd have their stop loss orders here. Price comes down, and you see how it wicks. You see how the wicks come, and it takes out anyone who would have had a stop loss here. Any stop loss orders that were here were taken out by this wick, right? These wicks here, taking out these stop loss orders, and then price instantly and massively reverted all the way up. What that is because these orders here would force whoever's bought Apple to sell. It allows smart money to buy price as it's cheap, right? These people here who have put their stop loss orders here, they're forced to sell. They have to sell to get out of their position. Smart money is buying, and then they ride price up to the next key liquidity pool, right? Remember, there's billions of dollars here. There's not billions of dollars at this weird gap here, or at this candlestick here. Only at these highs, right? These highs here, and these lows here. That is where the money is, and the market will move where the money is, right? That is liquidity, and I'm convinced if a trader just came, right, had no experience of trading, and the first thing he understood was liquidity, the first thing he learned was liquidity, he can be profitable in a year. I'm convinced if you sat me down as soon as I started learning how to trade and you said, you know what, instead of hoping and praying that price is going to bounce off these random levels, if you just target them instead, like, you would make money. If I followed that, I would have been profitable in the first 6 months, to be honest. In the first 6 months. Instead, it took me 2 years to become profitable because I had so much wasted information, so much crap that you don't need, right? And the first major thing that almost all beginner traders fall for is support and resistance. It does not work. It does not work at all. And if you use liquidity, you'll be profitable, right? My entire trading strategy is just this. It's just targeting highs and lows. That's all I do is I target highs and lows on the 4-hour chart, right? So not daily, the 4-hour chart. Any time frame, 4-hour or above, has significant liquidity, and the market will move towards it almost like a magnet, right? And that's the first key reason why most traders fail. And the second reason is also part of like technical analysis. It's all these indicators, right? And you must have seen it. You must have used all these indicators, right? And I don't use any indicators, by the way. Like, my charts are completely clean. They're completely naked. It's just a normal, clean, professional chart. No indicators needed. I'm telling you, almost all profitable traders, they do not use indicators. You do not need them at all. And the reason why you don't need indicators is because there's something called a huge time lag. So let me just get onto the whiteboard, right? Let's just write this out. There's something called a huge time lag, right, between indicators. Now, a time lag is important because let's say you've got, 2 moving averages. Let's use the red, right? Let's say you've got 2 moving averages and you're waiting for them to cross over like this. And I've not used it in so long, by the way. So let's say buy time price crosses here and you want to buy price, right? Let's say once these moving averages cross, you're going to start buying price. What actually happens is that, let's say you've got some, we've got some price action like this, right? Price will start moving off aggressively like that, right? Like that. And then by time this moving average actually crosses over, it's like here, right? You'll find at this point here, and then the market will start to consolidate or start reversing, right? It's too slow. You want to be buying here, right? You want to be buying here ideally, right? And what I do is I usually buy here. I buy like a little retracement and then continue price up, right? Moving averages, VWAP, all that sort of stuff it's too slow. It's too slow. And let me just say something important about VWAP, volume profile, level 2, all that sort of stuff. I bought a course from a well-known guru on all that sort of stuff, and it does not work. It does not work either, right? And what I'm talking about is, you might have seen this volume profile stuff. So volume profile is, when people have all this fancy software and it looks like almost like a normal distribution and in mass, right? And they've got like some bars here like that, right? And you might have seen this like this. And what they say is, let's say you've got price just moving up like this, right? Like that. Price moves up. They say once it gets out of this range here, price will just move back, right, like that. And then once it falls out, it will move back up, right? That's what they say. And they'll start shorting here and start buying here, hoping that price comes back to this level. I bought a course on this. I spent a lot of time studying this. This is a load of crap. It's a load of crap. It does not move at all. Now, sometimes this will work. Sometimes, occasionally, it will work, right? And they'll only show the examples when it works. The reason it actually works, or when it does work, is because of liquidity, right? It's because price is moving for liquidity, and it's actually going to force price up. It's going to force price up. Like right here, they would say that price is likely to, see how we've got like almost like a consolidation. They'll say that the market thinks that this is fair value, and that whenever price does this, as soon as it gets above these highs, it's going to quickly come back to the average, right? Does not happen at all. We just shoot right off, right? That sort of stuff, volume profile, all that sort of stuff, VWAP, does not work. Does not work at all. And I'm telling you, you'll make so much more money if you just have clean, naked charts like this, right? Just clean, naked, professional charts. Sounds a bit weird, but like, I'm telling you, all I use is just a plain, simple candlesticks. It's all you need. Okay, so once you understand liquidity and all that good stuff, the second thing that holds traders back is psychology, right? And let me just tell you something. If you don't understand like how to trade, right? If you can't read these markets, if you don't understand what's actually going on, you know, don't focus on psychology. You don't need it. You need an actual edge, and the edge is just a profitable trading strategy. That's all it is. And I'm telling you, if you use liquidity, and you know, I know I just bashed on indicators and they don't work, but let's say you were targeting these highs here, right? So you were targeting these highs here, and then on the 5-minute chart there was like a moving average crossover, and you're targeting key liquidity, then you can take it as your entry pattern, right? But you have to have liquidity, because these markets will only move for key highs and key lows on the higher time frames, right? But let's just suppose that you understood liquidity, you understood all that. There'll be two things that will hold you back, right? There's two major things that hold traders back in terms of psychology. The first is fear, right? Let's make this a bit bigger. Fear, like that, right? And this is what held me back for a long time, right? And fear is, let me just mark out the second one. The second one is greed. And what usually happens with traders is they fall into one of these two categories, right? They fall into one of these two categories here. Let's make this bold, right? Like this. So they fall into either fear or greed. Now, for me personally, I was a fear-based trader. Now, what does a fear-based trader mean? It means they hate one thing in particular, and you might relate to this. It is losing. They hate losing, and that was me. I absolutely hated losing. I think maybe because I was a perfectionist, right? Like everything I had done in life, I succeeded at. Not sound like big-headed and stuff, but like for me, losing a lot in trading was very hard. It was very hard, and I would be a fear-based trader, right? Instead of getting greedy and trying to make money back, I would be so scared to get into the trade. Okay, I would actually genuinely be scared to get into the trade. Like I'd have like, not anxiety, but I'd be like, oh man, I don't want to lose. And if you're too bothered, you know, too busy thinking about not losing, you're never going to make money. Because if you want to make money in trading, you're going to lose money. Right, write that down. If you want to make money, you're going to lose money. It's just the way it is. Because what you need is a risk to reward ratio, right? Risk to reward ratio. So ideally, whatever you're risking, right, your reward, so your take profit should be a lot more. So if you're let's say every trade you're risking 1%, you should be making at least 2%, I would say, or ideally 3%. So for me, right now, every 1% I risk, I'm aiming to make 3%, right? Pretty good, you know, pretty good risk to reward ratio. I would never say go above a 3 risk to reward ratio, because the higher the risk to reward, the lower the win rate, right? But a fear-based trader, they hate losing. They might know all this technical analysis. And this is me. Like I could tell you exactly where these markets were going to go, but I couldn't make money from the market, so I was too scared to get in. Like right here, I'd be too scared to buy, and then once it go through, you know, I'd be annoyed at myself, frustrated at myself. Like, oh, why didn't you buy? That was what held me back. Now, the second thing that holds most people back in terms of psychology is greed. And, you know, like I said, you usually fall into one of these two categories. And, you know, if you fall into both categories, you're fucked. Okay, not really, but like, you know, you usually fall into one of these categories. Because for me, I was never greedy. I would never chase price, right? Because these greedy, the traders who are greedy, they end up chasing price, right? They end up chasing price. And another thing they do is they can't follow their model. This might be you, right? They might have a perfectly profitable, you know, trading model, has liquidity, has everything they need to be profitable, but they just can't follow it. They can't wait, right? This is what it is. It's essentially, you know, patience, right? Patience is the big thing here, right? They're so desperate to make money, right, that they're not patient, right? And with trading, patience pays, right? If you're not patient, you're going to lose a lot of money very quickly, because the best traders rarely trade. And this is another key point, right? The best traders rarely trade. I get 1 to 3 trades a week. I don't know about you, but when I first got into trading, I thought I'd be trading every day, multiple times a day. That's completely wrong. That's not true at all. I trade about 1 to 3 times a week, right? And I get a 50% win rate. Imagine this, right? After all of this work that you put in, a 50% win rate, which is fantastic, by the way. You can get a free risk to reward ratio and a 50% win rate. You can be a millionaire. Trust me, bro, you can be a millionaire. You can make a lot of money from that. So, and this is realistic, right? Again, this is another key thing that holds so many beginners back, is they're chasing perfection. They're chasing perfection in a market that's inherently imperfect. There is no 90% win rate. There is no 100% win rate. There's really no 70% win rate, right? The best traders, and this is what I know, you know, let me tell you something. I know a lot of traders. The best traders, they have a 40 to 60% win rate, right? And their risk to reward is either a 1 to 3 risk to reward, right? That's what the best traders have. They either have a 1 risk to reward ratio or a 3 risk to reward ratio, and they have a 40 to 60% win rate, right? This is realistic. This is so key. No guru's going to tell you this. This is realistic trading. And it took me so long because I thought that'd been 80, 90% win rate strategy. At least 75%, right? I think I was obsessed with 70% for a long time, for almost for like a year. I was like, okay, I need a strategy that's 70% because that's profitable fairly quickly. But I had a 50% win rate, and I was like, oh, I don't like that. I don't like that. You can be really profitable with 50% win rate, right? Let me tell you something. You can be really profitable with that, as long as the risk to reward is, decent, right? But all traders, all profitable traders, they have something like this, and this is realistic. Let me mark this out. This is realistic. Let's type this out. This is something that you could actually get in these markets, right? This is something that you can actually get. I'm not promising you a 90% win rate because that's not realistic, and this is what holds most beginners back, right? Is that they're chasing for some perfect indicator, some holy grail strategy is. The reality is you're going to lose a lot. You're going to lose a lot. You can have lots of losers. You're going to have losing streaks, and you need to know how to deal with it. And the way to deal with it is not take it personally. The key thing is to detach losing from who you are as a trader, right? Because every time I used to lose, I used to think, oh, I don't know what I'm doing. I don't know what I'm doing. Let me tell you something. Losing is very normal. Very normal. And losing streaks are really normal too. This is what nobody taught me, right? Nobody taught me that losing is normal and that losing streaks are really normal. And nobody, sure as heck, taught me this. No one taught me this. This is probably the most important thing outside technical analysis to the psychology that made me profitable. The moment I realized, oh, the best traders who are flashing all these, payouts, Lamborghinis, all that sort of stuff, they have a 40 to 60% win rate and a 1 to 3 risk to reward ratio. At that point, I was like, oh, I'm just like them. I have a 50% win rate and a 3 RR. I'm literally right in the middle of them. And it's completely fine. I don't need 70% win rate. I don't need any of that. I just need a normal, reliable, consistent trading model, and you're going to lose, but you're going to win too, and over the long run you're going to make money. And that is trading. that is realistic trading. You get one simple entry pattern using liquidity, and then you work on your psychology. That is how you become a profitable trader. It's that simple. Now, if you've watched this far in the video, you have what it takes to be a profitable trader, because trust me, most people, this video is almost 20 minutes now, most people don't have that attention span. They don't have the attention span, and they just want whatever entry they can get. And I've given loads of entry patterns out on this channel, and they just want the next entry pattern, the next flashy pattern. Let me tell you something. It's not the model that's going to make you profitable. It's not the model, it's the mindset, right? Your mindset is what makes you profitable. Your mindset is what makes you rich and successful. It's not the entry pattern. The entry pattern is the least important thing, right? The only thing that matters in terms of technical analysis is liquidity. As long as you're targeting these highs, or let's say we're bearish, if you're targeting these lows, you'll be profitable. Any indicator, fair value gap, whatever you want to use, any entry pattern will do. But as long as you've got liquidity, you'll be fine. After that, it's just psychology. And with the right education, any trader can be profitable within a year. Like, I'm 100% sure that any trader can be profitable within a year, going from beginner to advanced, right? It's not that hard. You just need to have the right education and the right expectation and the right mindset. But once you got that, you're sorted. You're a profitable trader, and you can make all the money in the world that you want. But yeah, that's all there is to this video. Make sure you like and subscribe. And if you want a full step-by-step guide, no messing around, no BS, teaching you exactly how to trade, what technicals you need, and all the psychology, all put into one package, then I've got a course and link in the description below. But yeah, other than that, like, subscribe, and make sure you leave a comment telling me what you want me to cover next. And I'll see you guys in the next video. Peace.